guys, Alex here, ajnashville.com. So here recently I've seen a lot of banter on different forums and different areas in regards to the VA loan. You always have the patriot that's saying, hey, it's your duty to accept VA offers and to consider those VA offers. Here's the thing we know as professionals. We are all patriots, we are all patriotic, we all want to do what we can for our veterans. However, there is still a group of people that believe that a VA loan is inferior. I know it's hard to believe, but I saw this firsthand in a group the other day where the question was literally asked, is a VA loan inferior to other loan products? Now, I see a lot of fight back and forth, and it's mostly emotional, not factual fighting. There's no point in that. We have to take the emotion out of the equation and talk about the facts when it comes to VA loans and looking at VA offers. So, I'm here to kind of dispel some of the myths regarding this. And actually, I'm just going to go based off this post that I put in one of the local forums. One of the things that we talk about is VA loans are guaranteed in case of a default. What that means for the lender is the lender then says, hey, this loan has defaulted. Mr. or Mrs. VA, we need X amount of dollars to cover this. Now, I know most of you are listening and you're saying, well, that protects the lender. Who cares about that? Well, in turn, the lender will have less overlays and less guidelines that they have to force upon that loan because it is a higher performing loan. The last statistic that I read said VA loan default rate is 1.8%. That's almost half of what FHA is and a little over half of what conventional is. Now, you tell me, if you're an investor and you're looking at VA, FHA, conventional, which one would you spend your money on? Next, you have no mortgage insurance. Now, this isn't a charitable contribution. The 100% financing isn't saying, hey, here's a down payment assistance plan, or here's a charitable contribution, or here's a fund over here that funds this program to allow these veterans to obtain 100% financing. That's not the case. This is one of the real benefits that veterans have while they're in the military and after they've exited the military. It's something that they're able to use, and it's something that they're guaranteed to have as long as the lender doesn't have additional overlays. Now, when I say that, I mean VA doesn't have a minimum credit score. It's lender overlays that provide that. However, VA cannot force a lender to lend specific money based on their guidelines. That's why you see some small overlays with that. The next thing that I hear, the debt to income ratio. Oh, they won't qualify because this reason or that reason. What we look at when we look at VA loans is we look at the residual income. The residual income is going to dictate whether or not that person can actually afford to purchase that home. Now, years back when all these programs defaulted and the market crash kind of went down, everybody looked at VA and said, why aren't your deals defaulting? That's because they do qualifications based on real numbers. Price per square foot, family size, maintenance cost, etc. You get the point. So these are people that are really qualified based on their current actual financial situations. Tidewater. So I hear this quite a bit. This is when people say, well, the VA inspection is harder than other inspections. First of all, let's get something clear. There's no such thing as a VA inspection. The VA does not send anybody out to say, hey, we need to make sure that this is what it's supposed to be. They're looking for things like safety hazard, health hazard, immediate cost up front. If you've got an aged roof that the shingles are flying off of it, that's probably not going to qualify for a VA appraisal. If you have urine stains from animals in the living room, that's a problem. That's a health issue. If you're missing a handrail and there's a couple stairs, and depending on your area, it's going to depend on what your local codes are, but if it's more than 36 inches in most cases, if there's no handrail, that is a safety hazard. Now, when we look at this and we look at the appraisals that are done, they're also done to a point where you're allowed to dispute the value if the value comes in low. So there's something called Tidewater. I'm not talking about the shit that your kids shoot in the bathroom in high school and everything else. I'm talking about a program that VA has put into effect that the appraiser goes in and says, hey, we looked at the comps. Based on your value, we don't see the value being there. So what they do is they contact the person that is the point of contact. Typically that person is the seller. Why? Because as mortgage professionals, we forget that, hey, you know what, if this enters into Tidewater, I need my information on there as well so they reach out to me. Because most times sellers agents, they see an appraiser called, they don't necessarily call them back or answer. They don't realize the severity of this. Once that is initiated, you are then allowed to give them comps that have occurred prior to that date that may affect that value in a positive way. Now, the thing that we typically see is we get all these comps and, oh, this house sold this week and that happened last week and blah, 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 but none of them are within the scope of the area. So when you choose your comps, choose wisely. The appraiser does have to go through and address each and every individual comp. Now, once a value has been determined, you're done. Tidewater is not something that you're able to engage in. But you do have a second option, the reconsideration of value. That allows people at the RLC or a SAR to adjust the value based on what they see and what they see a need for. That is a whole nother topic. We will get into that in another video. All right, now appraisals. In the state of Tennessee, they're 10 business days from date of assignment. So if you're having issues getting an appraisal back, you need to contact the local RLC, which in Tennessee, the RLC is located in Atlanta. Contact them and tell them what problems you're having. They will then in turn contact the appraiser and do what's necessary to make sure that appraisal comes back in a timely manner. Several infractions with that, VA will blackball that appraiser. Let me tell you something, if you're an appraiser, getting on that VA list is something you definitely want to do. Staying on it is something you almost have to do, but it's earned, it's not given. All right, VA also requires that underwriting goes through and does what they can to make sure. Sorry, we got interrupted. There was an emergency alarm that came through and stopped our broadcast. Anyways, so the other thing that I want to say is VA requires that underwriting does anything within reason. As long as the underwriter can document the reason that they approved the person, VA will give them that leeway and give them the rights to approve it and still guarantee it. They also prevent underwriting from putting any sort of delay in the approval process. Here at my office, on average, we're closing VA loans in less than 21 days. So obviously the VA loan doesn't take longer than any other loan. And if it does, you should probably have a talk with your operations. That pretty much sums up what I was going after. Those are the major points. This takes the emotional side out of it. Like I said, we're all patriots. We want to do what we can to help our veterans out. But we also have a responsibility to make sure that we represent our buyers and sellers well. If you have a seller that is in question on whether or not they should accept a VA offer or a seller's agent, show them this video. It may change their mind. It may not. I have no idea. But I'm trying to do what I can to make sure we can help veterans in the best way possible. Thanks again for tuning in, guys. We'll talk to you soon.